Bitcoin has emerged as a revolutionary financial asset. Its decentralized nature and potential for growth have captivated investors worldwide. Yet, navigating the complexities of buying and storing Bitcoin directly can feel daunting for many. Fortunately, there's a simpler way to enter the Bitcoin arena: Bitcoin ETFs. These exchange-traded funds offer a user-friendly, accessible path to participate in the potential upside of Bitcoin without the technical hurdles of direct ownership. Imagine gaining exposure to Bitcoin's price movements with the same ease as buying a traditional stock. Bitcoin ETFs make this possible. They are traded on major stock exchanges, enabling investors to buy and sell shares throughout the trading day. This streamlined approach eliminates the need for specialized wallets or intricate security protocols, opening up Bitcoin investment to a broader spectrum of individuals. Whether you're a seasoned trader or a newcomer to the world of cryptocurrency, Bitcoin ETFs offer a convenient and regulated entry point. A Bitcoin ETF, or exchange-traded fund, is a basket of assets that tracks the price of Bitcoin. These ETFs are listed on stock exchanges, making them easily accessible to investors. When you buy shares of a Bitcoin ETF, you're not directly owning Bitcoin itself. Instead, you're investing in a fund that holds Bitcoin, allowing you to participate in its price fluctuations without the complexities of direct ownership. Think of it like buying shares of a gold mining company. You're not buying physical gold, but your investment is tied to the performance of gold. Similarly, a Bitcoin ETF's value is directly linked to the price of Bitcoin. This structure provides investors with a regulated and familiar way to gain exposure to Bitcoin's potential. The ETF format simplifies the investment process, removing the need for individual wallets, private keys, or dealing with cryptocurrency exchanges. Moreover, Bitcoin ETFs offer a layer of security and transparency. They are subject to the regulations and oversight of traditional financial markets, providing investors with increased confidence. The underlying Bitcoin holdings of these ETFs are typically stored with reputable custodians, mitigating the risks associated with self-custody. This regulated framework makes Bitcoin ETFs a more palatable option for investors who prioritize security and regulatory compliance. The world is witnessing a paradigm shift in finance, and Bitcoin is at the forefront of this transformation. From major corporations to institutional investors, Bitcoin is gaining acceptance as a legitimate store of value and a hedge against inflation. This growing acceptance is creating a favorable environment for Bitcoin ETFs, making now an opportune time to consider an investment. Bitcoin's decentralized nature and limited supply offer a compelling alternative in an era of increasing inflation and monetary expansion. Unlike traditional currencies, Bitcoin's supply is capped, making it resistant to devaluation. This characteristic has attracted investors seeking to protect their wealth from the erosive effects of inflation, particularly in the current economic climate. As more institutions recognize Bitcoin's potential as a hedge, the demand for Bitcoin ETFs is likely to rise, potentially driving up their value. Beyond its inflation hedging properties, Bitcoin has shown remarkable potential for price appreciation. Its limited supply and growing demand suggest that its value could continue to increase over time. While past performance is not indicative of future results, Bitcoin's historical price trends have captured the attention of investors seeking high-growth opportunities. Bitcoin ETFs offer a way to participate in this potential upside without the complexities of direct ownership. Section 4. Benefits of Bitcoin ETFs, Accessibility, Growth, Opportunity. Bitcoin ETFs offer a compelling combination of accessibility, growth potential, and favorable market conditions. Their presence on major stock exchanges makes them readily available to investors of all levels, removing the technical barriers associated with direct Bitcoin ownership. This ease of access democratizes Bitcoin investment, allowing individuals to participate in this emerging asset class without the need for specialized knowledge or infrastructure. The potential for significant returns is another attractive feature of Bitcoin ETFs. As the demand for Bitcoin continues to rise, its price is likely to follow suit. By tracking Bitcoin's price movements, ETFs offer investors a way to capitalize on this potential growth. While all investments carry risk, Bitcoin's limited supply and growing mainstream acceptance suggest that its long-term price trajectory could be favorable. Furthermore, the current market conditions present a unique opportunity for Bitcoin ETFs. As traditional financial systems face increasing uncertainty, Bitcoin's decentralized nature and store of value properties are gaining prominence. This shift in investor sentiment is creating a fertile ground for Bitcoin ETFs to flourish. Their regulated structure and ease of access provide a comfortable entry point for those seeking alternative investment options in a rapidly changing financial landscape. Section 5. Bitcoin versus Bitcoin ETFs. Understanding the difference. While Bitcoin ETFs offer a convenient way to gain exposure to Bitcoin, it's crucial to understand the distinction between owning Bitcoin directly and investing in a Bitcoin ETF. When you buy Bitcoin, you own the underlying asset and have full control over it. You are responsible for its security and storage, typically through a digital wallet. This ownership grants you the flexibility to use Bitcoin for transactions or transfer it to other individuals. In contrast, a Bitcoin ETF represents an investment in a fund that holds Bitcoin. You don't directly own the Bitcoin itself, but rather shares of the ETF that tracks its price. This structure simplifies the investment process, but also means you relinquish certain aspects of control. You cannot use the Bitcoin held by the ETF for transactions or transfer it to other parties. The choice between buying Bitcoin directly and investing in a Bitcoin ETF depends on individual circumstances and investment goals. For those seeking direct ownership and control over their Bitcoin, buying and storing it independently might be preferable. However, for investors who prioritize ease of access, regulatory compliance, and a simplified investment experience, Bitcoin ETFs offer a compelling alternative. Section 6. Conclusion. Take action today. Explore Bitcoin ETFs. The world of finance is evolving, and Bitcoin is playing a pivotal role in this transformation. Bitcoin ETFs provide a regulated and accessible gateway to participate in this exciting evolution. Their ease of use, growth potential, and favorable market conditions make them an investment worth considering. Don't wait on the sidelines while others capitalize on this opportunity. Take action today. Educate yourself about Bitcoin ETFs, explore the options available through your brokerage account, and consider how this innovative investment vehicle might fit into your financial strategy. The future of finance is unfolding, and Bitcoin ETFs offer a front-row seat to this transformative journey.